Welcome, everybody, to Operation Housing Freedom. I'm Brian O'Connell. With me is Ron Stroupe of Loandepot. I'm a real estate agent, and Ron is a loan officer with Loandepot, like I said before. This is a podcast brought to you by us and Bridgewater Television Studios about everything real estate, the market, interest rates, everything of this sort. It's not going to be just for veterans, but it's going to be for real estate purposes. We'll have special guests. I'm an Air Force veteran, and my friend Ron here was a Marine back in the early 90s. Ron, tell us a little bit about yourself.
Hey, Brian, thanks for having me. I'm excited for Operation Housing Freedom. Happy New Year.
Happy New Year, man.
Yeah, so this is my 26th year. I'm entering my 26th year in the mortgage business.
That's awesome,
and
man.
as you mentioned, I was in the Marines back in the early 90s, got out, bounced around a little bit, found my way into mortgage lending, and been doing it ever since.
Awesome, man. I'm entering my third full calendar year in real estate, believe it or not. It's crazy. Air Force veteran, served just out of high school, got out, decided I didn't want to go into law enforcement. I thought I didn't want to. Decided a career in real estate was the way to go, and I've been doing it ever since.
It's funny because I actually wanted a career in law enforcement, but my then fiance and now wife was like, nope, not doing it. I'm not doing it for you. But I fell into finance and never looked back. So it's funny how our paths kind of, similar.
Full steam ahead, man.
Absolutely.
It's awesome. So it's like I said, two veterans podcast. It's going to be centralized around VA loans. However, it's for everybody. It's not just going to be for veterans. We'll talk about first responders programs, all different types of lending programs, and the market in itself as well. So myself, I'm a real estate agent. I work for Chinati Realty, headquartered out of Chelmsford. However, I operate in the Bridgewater area in the South Shore. Plymouth County, Norfolk County, Bristol County are my areas of specialty. I work primarily currently with first-time home buyers and first-time home sellers. However, I can help anybody in any type of real estate situation regardless. Last year, I did 9 purchases. I believe we partnered on 5 of those.
I believe so, yeah.
Yeah, it was awesome. Last year was a really good year.
Yeah.
How did you do last year?
I ended up I helped about 42 families.
It's awesome.
Between purchase and refinance. Refinance is definitely tailed off over the past few years with interest rates where they are, but was fortunate enough to help a few veteran families, but a lot of people that were purchasing last year. It was a tough year.
Yeah.
A little bit better than the year prior, but still, not where we were in 2021. That's for sure.
It's tough.
Yeah.
Yeah. Interest rates went up.
Rates went up.
Supply in the housing market was low. We'll get into that here in a second. Remind everybody here, what are your main specialties in your career field?
So as a veteran, I got into the mortgage business because I had a bad experience using my VA, home loan benefit for the first time. So it pushed me to pursue a career in the mortgage industry. And I really, latched on to VA home loans. Being a veteran,
naturally,
both my brothers are veterans. A lot of my friends are veterans. So it just seemed like a natural fit in terms of really digging into the product and how it can benefit veterans. I do all kinds of mortgages, first-time home buyers, jumbo loans, repeat buyers. But I really have a passion for helping veterans use their benefit. I think it's such an underutilized VA benefit that's out there. A lot of veterans don't even know that they qualify for it.
Yeah, it's awful. We kind of learned that early on in my career. Obviously, it wasn't early in yours, but kind of figured that out, kind of set out on a mission together to try to help break that stigma.
Yeah, I think what opened our eyes when we first started working together, and I think the reason we work so well together is because we are both veterans and have a passion for that. But I think one of the things that we realized early on working together was, getting in front of a lot of the veteran service officers out there and realizing that there was a real need in the communities that we serve for veterans to understand. I think a lot of them didn't understand what the VA home loan benefit was and how it could, how they could serve their communities with it.
No, I remember that. And we did that webinar for a lot of them. And we did a ton of one-on-ones after that to answer even more questions. I mean, they knew it existed, but they themselves didn't know the ins and outs of it. So how do we, expect the average consumer to know the ins and outs of the VA loan themselves? So this kind of goes along with this long-term goal mission that we've had, put out video content and now creating this podcast, create awareness around, obviously not just VA loans, but the VA loan program, what it means for veterans, who it's for, the ins and outs of it and the benefits, and all the other industry myths in real estate aside from VA as well. And I think we're well on our way to kind of debunking a lot of that stuff. And we've come a long way, man.
We've come a really long way just in a short period of time, just since we started working together a year and some change ago.
I know.
But yeah, you're right. There is a lot of not only misunderstanding, but misinformation out there about VA loans.
Yeah.
And, the only difference between a VA loan and any other loan program is qualifying is the same. You need good credit. You don't have to have perfect credit, but you need credit. You need income, employment, assets, et cetera.
Right.
But I think, just educating veterans and the industry, a lot of misinformation with real estate agents and loan officers that don't understand the product and really are pushing veterans out of that program because they think it's more difficult than any other program. And it's really not. I think it's easier.
It is quite easier, and it's been more beneficial for the consumer all the way around. And in our situations when we work together on a VA loan purchase for a veteran, the listing agents a lot of the times also have that misconception that, hey, VA loan's a lot more difficult. It would be easier to go through this type of financing program, et cetera, et cetera. But in reality, there's really only one difference or, two differences from VA to any other traditional loan program. And it's just the water test and the inspection, the wood destroying pest inspection.
Yeah, that's it.
That's literally it.
Yeah, and VA really only has, from my perspective, one point of, their hands in the transaction, which is ordering the appraisal from a VA approved appraiser that's on their list. Which
is in any Joe Schmo appraiser that could go out to Cindy Lou Who's house down the street and do their appraisal as well.
Exactly.
Which it's frustrating.
Yeah.
But
the appraisal piece, I guess I'll talk about that since we just mentioned it.
Yeah.
Yeah. VA just doesn't want veterans to get into a property that needs a lot of maintenance within the first couple of years.
Right.
They're not going to nitpick if, there's a, splinter sticking out of a piece of siding. The place has to be in pretty bad disrepair for VA not to want to lend on it. VA wants to help veterans get into properties.
Right.
And, we're going to work with them to get that done for the vet. But there's a lot of hesitance, I think, especially over the past couple of years.
Well, right. Yeah.
Because it's been such a competitive market, I think veterans are getting the short end of the stick when it comes to making offers on property.
100%.
Yeah. And I think it just has to it has to be a conversation between the veteran's buyer's agent and their lender with the listing agent to really kind of explain, a lot of veterans do have money to put down, but they want to take advantage of the benefit, which is zero down payment, no private mortgage insurance,
right,
and a lower interest rate, lower fees.
Yeah.
It's really just communication is what it boils down to.
Yeah. And to tail off that point before we get too off topic, the lender communicating with the listing agent, how many times have we won offers? Yeah. Just with a simple phone call from yourself.
Yeah.
And how many referral partners have you gained from that? Just calling the listing agent yourself, speaking to them on behalf of the buyer, explaining the finances, explaining the situation, not in great detail, of course.
Sure.
But how many of those have we won just last year?
Yeah,
I think it was like 4 of them.
Yeah, I get.
And that was literally the deciding factor. The words of the listing agent each time is, "Oh, I've never had a lender call me and explain to me like that. I love Ron." And then by the end of it, they were like, "Oh, he's so great to work with."
Yeah, no, I appreciate that.
The process was so smooth. But anyway,
it takes 2 seconds to pick up the phone for me to call a listing agent and say, "Hey, this veteran is super well qualified." Of course, like you said, I can't give a lot of information, but listing agents are kind of taken aback by it. and they're basically saying,
Oh,
no one else is doing this.
no.
And I just
Big
think
problem.
you really just have to go to bat for your veteran.
Any client.
Any client.
For
sure.
But in this market right now, just with the stigma that, if a buyer's putting 0% down versus a buyer's putting 10 or 20 or even 5% down is less qualified to buy the home.
Exactly.
And that's the stigma that's going around, and that's not true. It's not the case at all. It's just a simple benefit that was earned through service, serving the country, and that's it. It's it. It doesn't make anybody less qualified because you still have to go through the same pre-approval process, credit check, income requirements, and everything of the sort like you mentioned before.
Yeah.
So,
and I think in some cases there's less documentation on a VA loan than there would be with some other lending programs.
in a good way.
In a good way.
In a good way.
Absolutely.
But so with that being said, and as the course of this podcast and the show goes on, we'll get into more specifics with VA, including next episode where we'll really kind of talk about who it applies to, how do you qualify, and how to go about it. But I wanted to kick off. It's January 9th. It's the new year, 2024 predictions. You ready for it?
I've been predicting every year for the past 26 years. So let's jump into it.
All right. So the big heavy hitter in the market today, Mr. Ron, interest rates.
Interest rates. Well, lenders have, as much control over interest rates as the sun going up and the sun coming down every day. We don't know. I hate this cliche, but it's so true. We don't have a crystal ball. We have no idea. Yeah. But in terms of just understanding the markets, because of inflation over the past few years, the Fed has tightened up rates since 2022. So probably, mid-spring 2022 is when we saw rates shoot up. We saw them, the Fed raise rates. I forget what the number is, maybe 12 or 13 times over an 18-month period.
Yeah.
As of, October, November, I think we peaked in October, November. I think we saw rates in the low 8s.
It was like the third week in October.
Yeah.
Yeah.
And people are still buying.
Oh, yeah. Oh, yeah.
Yeah. So over the past month and a half, we've seen rates come down into the 6s. Big savings for people.
Yeah.
So the, holiday market was pretty slow. I think now that we're past the holidays into the new year and people have resolutions to go out and buy homes this year, I think people are starting to come back to the market because they're seeing rates in the 6s and they're seeing a little bit more affordability, able to stretch their dollar a little bit further and, help their budgets out.
Yeah. I think since the new year, we've had 3 or 4 people come apply for mortgages together. Yeah. Just you and I.
Yeah.
Just our combined, our joint clients.
Yeah.
Just 3 or 4 since the new year.
Yeah.
Something of the sort. At least 3, if not 4.
Around 3 or 4.
Which is great.
Yeah. And the last week was the first, pretty much full week, not even a full week, but close to a full week of the new year. And I've been busy. And we've been talking about this for the past year. And I think it's starting to come true now. When rates are up, people were still buying, but a lot of people did pull back and go to the sidelines. A lot of buyers did.
Oh, absolutely. I mean, especially once rates peaked in the 8s back in October, people ran for the hills, and understandably so. But
for sure.
There will always be a need to buy and sell a house. You never know what happens, what's going to happen.
Yeah, just has to be the right time for them.
Yeah, well, it has to make sense in the life, and we tell it to everybody. Don't buy a house just to buy a house. It has to make sense for your budget, for your lifestyle. Why are you looking to buy in the first place?
Right.
Do you need more space for you and your household? Do you need less space? Or are you just tired of renting? And it's a perfectly good reason.
Sure.
If you're just tired of renting, but just to go achieve home ownership, just to achieve it, just to do the thing. Don't go do it. Make yourself housebroke at the same time either. Yeah. That's really my biggest point, and we say that to everybody.
Yeah, without a doubt. I think it becomes, and you and I have talked about this before in some social media content that we've done. The thing that drove us both crazy was sort of the date the rate, marry the house.
Oh, I very early on in my career was a culprit of it. I will show you the video. I went on Instagram. I made the rule. I said, hey, I was a culprit of this. This is nonsense. I think it was like April of 2022. I think I think I was one of those, date the rate, marry the house, or whatever the hell the saying is. Yeah, no.
I forgive you. You're a young agent, brand new to the business.
I don't forgive myself, but it's fine.
But the reason that it drives me crazy is, in Massachusetts, I think last June we hit our average price for a property. A single family home in Massachusetts hit $600,000.
Yeah.
$600,000. Well, when rates are in the 8s, that's a pretty big mortgage payment.
Yeah.
And you've heard this story. When I bought my first house, my rate was 8.875%, higher than what we've hit over the past 18 months.
But what did you buy your first house for?
$98,000.
Yeah.
I used my VA eligibility. I bought my house with, 0 down payment. The seller paid my closing costs. It was a buyer's market. It was a foreclosure. The bank did some work to the property, which banks with foreclosures now aren't really doing work to properties.
No.
So my mortgage payment was made with taxes and insurance was maybe $700-800 a month.
Yeah.
We could afford it with, 2 incomes making maybe $12 an hour. You're not doing that today.
No.
You need probably $130,000 a year in income to qualify at that.
At that rate, at the 8.
Yeah.
The 6 is better. The 6 where we're hovering right now, we're hovering, the average 30-year fix is sitting about 6.5%. Yeah. The average, it's not necessarily what the consumer's going to get, but versus that 8.25 peak that we saw back in October. Yeah. It's a big difference, but it's still a hefty payment nonetheless.
Oh, without a doubt. And I kind of understand the gist of date the rate, marry the house.
But it needs more context.
It definitely needs a lot more context. And I think that's what's been left out.
They were just singing and dancing. Yeah. Including myself.
No,
including myself singing.
Instead of the education component.
Correct. And that's one of my biggest inspirations in this business is Tom Toole down in Philadelphia. Okay. He's a real estate broker down in Remax. Shout out to Tom Toole. He's the GOAT. He always be the knowledge broker. Be the knowledge broker. And it's always stuck with me. And my broker, Lisa Chinati up in Chelmsford, she's the queen of real estate. I say it to her all the time and she hates me for it. But that's awesome. Those two on BAM, they're amazing. But be the knowledge broker. And that stuck with me, after I started doing those silly little dancing videos. It stuck with me. And it's just kind of been the mission that we've set out to do. So with that being said, we kind of tailed off a little bit. In your opinion, really quick, where do you see interest rates going through the year?
That's right. It was predictions for 2024.
It was predictions, but it's okay. It's the first episode.
So now that inflation's tailing off, the Fed, it's no secret the Fed's come out and I think they're estimating, a few rate cuts this year. They're not saying when or how many or, how much, but just based on where the economy is now, inflation's looking better. We're not seeing this huge recession that a lot of people had talked about. I can see we're hearing from economists that rates could be in the mid 6s. This was by the end of December of 23. Well, we've already been there.
By the end of December 24.
No, by the end of December 23. This is going back a month and a half ago. They were saying that, by the end of December 24, we could see rate in the mid 6s. We've already seen that in December of 23.
Right.
I think that we have a lot of room to see rates drop. I think with the spread in treasury yields and mortgage-backed securities, I think we're going to see a pretty significant improvement in rates. What does that mean? I think probably more so in the 5s, somewhere in that range. And I think that is going to help a lot of people.
I completely agree. I think at some points in the year, we may see high 5s. I think by the end of the year, we are in an election year, so things are going to get, things may be pretty volatile. Things go up and down. It gets crazy in election years. But in my opinion, based on, the experts that I listen to, the experts that I've talked to, I think we do touch high 5s through the year, but come December of 2024, I think we'll be rocking with a low 6.
Low 6. I'm a little bit more optimistic.
Low 6, high 5.
I think
around the 6 range.
I think mid to low 5s.
Really?
Yeah, I do.
Interesting.
Just
love it. I hope so.
I think it helps a lot of people. I think it helps a lot of people who are, sitting on a ton of equity right now too.
So what we're going to need to boost the inventory levels though, for sure, those low 5s. Yeah. That's kind of our next topic anyway. Where do we see inventory levels going next year? I mean, as a lot of people know, a lot of people may not know, it's the biggest issue in the market right now. Why houses are so, highly priced. There's no houses for sale. Why is that? Well, during the pandemic, when people weren't flooding the economy with money, that the Federal Reserve lowered interest rates to get people to start spending money, or borrowing money rather, and made it cheaper to borrow money. Okay. Lowered those interest rates to the 2.5%, 3% that we saw. Existing homeowners, what did we all do? Refinanced our homes into 2.5%, 3% interest rates.
Right.
Do I need to move right now? No. Okay. Do I want to move? Maybe. But do I want to double my mortgage and my mortgage payment? No. That's the problem. People aren't moving right now because they don't want these heightened interest rates. And a lot of the experts are saying, and I agree with them, that we need to see those low 5 rates to start to get more of those homeowners to start listing their properties for sale, get more inventory in the market, and loosen that tight, stringent competition that we've had over the last couple of years. And that's really the problem. And I really hope to see those low 5% interest rates, get more of these homeowners, educate more of these homeowners, and say, hey, here's where we're at. We're not here anymore. Sure, are you taking on a bigger interest rate? Yes, but you've hated your house since 2020. You bought that house. Right. You've hated your house since 2020. And now it's 2024. You've been in it for 4 years. You're only planning on being there for 2, maybe even a year. And now it's 4, almost 5 years later.
Now you're not only locked into that rate, you're locked into that home.
Right.
That
you don't really have to be anymore if we hit those low 5, mid 5 interest rates. And it's easier to explain to a homeowner and say, hey, I get it, but what do you want?
Right.
But it is hard to justify to a lot of folks, and I get it,
Absolutely.
But people are still moving, though. The people that need to move are moving.
Yeah,
which we know that much.
The reason I just went was you said 2020, and now we're in 2024.
I know, right?
I cannot believe it's
went
been
by like
4
nothing.
years.
Went by like nothing.
2020 and 21 were my best years in the mortgage business ever.
Right.
22, 23, not quite my worst years because I was back in the 07, 08, 09 Great Recession. But, definitely tough years with interest rates and inventory and just, competition that's out there. It's tough to give up that 2 to 3% interest rate. But to your point, they may not have planned on being in that property for long.
Mm-mm.
Or the pandemic, kind of shifted their focus to now they're working from home. Well, now companies have brought them back, or they relocated, but now companies are bringing them back. The other thing that I'm seeing a lot of is because of inflation and interest rates, not only on mortgages, but on credit cards and car loans and home equity lines of credit. We're seeing people sitting on a ton of equity in their properties since they bought in 2020.
Oh, absolutely.
But we're also seeing record credit debt.
Yes.
I don't remember. I think the last number I saw was $1 trillion in credit debt, and it's at an all-time high. And I think that, from my experience over the past 6 to 12 months, I'm seeing a lot of former clients coming in and basically saying, they're maybe not necessarily 100% happy with the property, but they don't want to give up that rate. But a lot of them are looking at the debt that they have and what they're paying for monthly payments and sort of consolidating that now. Yep. And I hate to see people give up those low rates, but it's a financial decision that people have to make. And I think we'll see a lot of people maybe not so much downsizing, but selling, cashing out that equity, paying off debt, and then buying the house that they really want.
Yes. Oh, yeah. And that was my next point. We are going to see this year, people are going to come to terms with the interest rates, realize that we're more than likely never going to return to those 2 or 3% interest rates. And people have had enough. People are tired. A lot of people that, bought the house because they needed to buy a house. They had nowhere else to go. Those people are tired, and you will start to see a lot more of those people list their homes for sale. And we're starting to see inventory increase very, very, very gradually.
Yep.
Not at any high-paced rate, especially here in Plymouth and Norfolk counties. But we are seeing an increase. We're also seeing an increased days on market, which is helpful for buyers. And that's a whole nother concept for a whole nother day, but that really just goes into pricing and marketing. the two biggest strategies when you're selling your home.
Yeah.
But in my opinion, inventory levels through the rest of the year are going to continue to increase very gradually through the rest of the year. I think the third quarter, which is, one of the more heightened inventory levels throughout the year historically, it's quarter 2 and quarter 3. But I think quarter 3, we hit our peak for this calendar year in terms of inventory levels. I think you see, hopefully, I'd love to see maybe 2.5 months worth of inventory.
Okay.
And currently, we're at about, a month and a quarter, month and a half-ish, hovering around that rate for Plymouth County.
Okay.
And basically what that means when I say that is how many months would it take to sell every piece of property that's on the market without adding anything new?
Okay.
Yep. That's what month of inventory means.
Sure.
For the average consumer, they may not know what I mean by that.
Right.
But that's where I think we're going to see an increase in inventory through the year. And as days on market increases as well, which isn't necessarily the worst thing in the world. It's not normal for a house to sell in 5 hours with 35 different offers at
That's not normal.
$700,000 over the listing price. It's not normal, right? We've made it normal. We've normalized it, but it's not normal. But
yeah, anyone who's gotten into the business over the past 4 years now, 5 years really, real estate agents, loan officers, you guys haven't seen a normal market.
No,
this is not normal.
No,
I don't know if it's the new normal. I have no idea if this is the new normal. That's a whole nother conversation for a whole nother time too, for the sake of time. But so from a supply perspective, what do you think about new construction?
New construction,
permits.
So two different questions, and I'll answer the new construction question here quickly for the sake of time, because I know we are running out. But new construction in 2023 surpassed the 40-year average for the first time in, I think, in 12 years. That's according to KCM, Keeping Current Matters.
Okay.
Now, did we exceed what we needed? No, we haven't done that in quite some time. But new construction levels are up, believe it or not, above the 40-year average. Nationally.
What about here in Massachusetts?
Here in Massachusetts, we're still in a shortage of new construction.
Yeah.
And I think that pattern continues here for the next couple of years. But again, another conversation for another time.
It is, but it does play into supply.
Absolutely.
I think we need to be.
We do need new construction.
We desperately need new construction.
Absolutely. We don't have enough homes for
the household formations that are
exactly
here and now.
Right. You're starting to see multi-generational home buyers now.
Right.
And again, actually, I think that's where we're going to cut it for now, because we can keep going all day and all night.
We can talk about supply all week.
So next episode, we're going to talk about Loandepot's first responder program, because again, this isn't just a podcast for veterans. It's for everybody, including our first responders. You guys just rolled out a super cool program for first responders. We'll deep dive into that. We'll talk again more about what the VA loan is, who qualifies, what it entails. We'll go deep dive into detail in that, and we'll talk about how to prep for the spring market.
We could be hitting an early spring market.
No, we will be hitting an early spring market.
Yeah.
We'll talk about that in the next episode. I'm Brian.
I'm
You're Ron. And this is Operation Housing Freedom.